Welcome back, YouTube. So right now we are on the cusp of something really big here. If you didn't watch the video from yesterday, please do. It speaks on the importance of us holding around 1630. And as you know, about 4 hours after that video, we exploded, just kind of like what we predicted. And now we are certainly above that mark. And we're actually resting above the 72-day moving average. This is extremely bullish. As long as we are even if we just maintain this level and don't go any higher, this is going to be the indicator that we need. But right now, the fact that we are above the 72-day, this is extremely bullish for Doge. So we are even for the market because we're seeing the run in Bitcoin, and that's typically the signal. Once you get that signal flash, typically there's going to be a lot of capital flowing into the market, and this is positioning us for that golden cross. That golden cross is it's going to do a number of things because I mentioned this in the title of the video. I mentioned 18 cent, 22 cent, and 45 cent because I know some of you are saying, what about like the levels and stuff? The levels do matter. And I'm not going to say that 18 cent doesn't matter, 22 cent doesn't matter. But when you have this explosion and you're going this far, it's possible that you can just get a run through of those numbers. And to give you an idea of what I'm talking about these like a repeat of something like what we've seen here, where we went on this historic run and we had over a week straight of just like 9 green days. And there are some levels of resistance in here that should have gave us some trouble. For those of you that have been invested in Dogecoin for quite some time, we were at 8 cent before we got this golden cross. Now, what are some levels that should have given us some trouble in here? Well, there are a couple of them. We have the 10 cent level, which historically gives us trouble. And we also have the 12 cent level, which historically gives us trouble. And as you can see, after this golden cross, neither one of those were any problem, even like despite history, despite the past pools of liquidity there, despite the past level of shorts coming in there. It absolutely did not matter. And we had this explosion and we just ran through those numbers. And when we have something that's going this aggressively and we have this golden cross, this is going to be put ourselves in a position to have something similar like that. Obviously, we'll have to see as this gap closes between the 14 and the 72, but it puts us in position to possibly have something similar to this here in as far as the aggression of the ascension. So what does that mean? That means that 18 may not be that much of a challenge now, and even 22 may not be that much of a challenge now. I'm taking a combination of the past two golden crosses between the 14 and 72 in the past two, and that's how I got the 39 to 45 cent range for those of you who haven't seen some of the older videos. So for this leg, that is kind of where I have the targets for Doge. Now, to support that price action, we can take a look here at Bitcoin, and you'll see similar price action. And you're going to get the cross in Bitcoin a lot sooner today. So sometimes people look at these numbers and they'll say, "Oh, well, Bitcoin's selling off." It can afford to sell off. People are going to take profits, especially around when you get around these all-time highs. It's going to happen with every coin. When Dogecoin gets around its all-time highs, you're going to see something similar as well. People are going to get scared. People are going to take profits. It happens. It's a psychological thing. It's not the end of the world here. It's just people are in profit, or they swing traders, all that. They typically want to start scaling back around there. And after this type of candle here, you can expect there to be some exchange going back and forth anyway. And another thing that we have to kind of but the thing we have to kind of consider is these candles aren't closing. So you can have these positions here where we have this downtrend, and it may not even be that big of a tick down. It may be, we may close at 70,000, may even close above a 70,000. It can still be a red day, but it doesn't necessarily mean that it's a reversal of trend. The trend is up. Like you can look at this any way you want as far as the capital coming into the market. This here, I don't know how else you can look at it. That is a bullish trend. Like if you're looking at from the 15th of May to today, this is a bullish trend. This is up. This is why you see this is the 14-day average. So what does this mean? Over the last 14 days, Bitcoin is averaging up. What does that mean for Doge? Like we just looked at, over the last 14 days, the coin is averaging up. So I don't know how people see some red and it automatically it's the end of the world, because that's not exactly how it works. And if you want further edification, we can look at total market cap and see something very similar as well. Obviously, this is made up of Bitcoin, but the important thing about looking at something like this is it also has the weight of all the other coins in there as well. And we are very close to getting that golden cross here as well. What happened last time? 1.5 trillion to around 2.7, almost 100% increase, right? Repeating this, repeating those same numbers will put us at an all-time high in the crypto market as far as for total market cap, right? So what does that mean? That means a lot of capital going into Bitcoin, a lot of capital going into Ethereum and those top 10 coins, Dogecoin. A lot of capital is going to go into those coins, and you're going to see significant pumps there, right? So this is how you're having these runs without even for Dogecoin. This is why you're still seeing these pumps and these reactions without Elon tweeting, every day, without the hype catalyst and a lot of the things coming on. You're seeing a much more organic run, but the coin is still moving up, and that's because of the spillover, and of course because it's a top 10 coin, so it's going to have that institutional allocation, and you're going to see very similar chart patterns that kind of align with like what Bitcoin is doing, what the total market cap is doing, because it's getting enough of that liquidity coming in there to chart very similar. So we're seeing the same price action here. Even with the weight of all the coins, the market, same thing. This is the total market, right? This isn't biased for any particular coin. Total market, this is an uptrend, right? Same thing from the 15th through the day. This is a very bullish trend, and we're closing in on the gap here between that 14 and 72, golden cross here on total market cap. So everything is indicating that we're going to get a boost of capital coming into the market. So this is what kind of can position us to not necessarily struggle with like a 18 or 22 cent like the last time, and kind of have that push to really just go through those numbers and do something similar to what happened last time. So we can take a look here at even for shorts, and you can see here and say, okay, well, if Bitcoin selling off is an indication of a downtrend, then you should see shorts piling in there to make money. And what do you see? Shorts are red. Shorts are down 11.62%. So now you have a contradiction to that theory, right? So if you're saying that Bitcoin's selling off, or we're going to have that retracement, it's not a run, it's just a flash in the pan. Now you have a contradiction, because now you have the people taking profits in the coin, but also shorts not jumping into the coin so that they can make money on the way down. Why? Because they don't believe that the asset is going to go down, right? So now you have a contradiction in that theory, because they know that if they come into this coin right now, they have a high probability of getting wrecked. So this is some of the things that you can kind of do to verify other charts. I love using other charts to verify other charts, because they should all tell a similar story if you're doing cross references to layer your theory as far as what's happening. So you see here, and this is another thing as well, this is a downtrend in shorts. What does that mean? That's a change of heart, right? This here overall is a change of heart in the tone of the market, right? This is how you know you're getting ready to coming to the bull run. Everything is down. The 200-day falling, 14-day going through the floor. Like this is like a highway to hell here, going through the floor. 72-day flatline, but it is dipping, right? So now you see, and then of course you have the current and the most relevant price action. This here is a steep decline. They're coming out of the Bitcoin shorts, and we can take a look at and compare this to Doge shorts, right? Get a feel for the overall market and what the market is saying to you, and instead of just like emotions and looking at red and green on the charts. All the markets tell a story, right? I'm not sure. I don't remember why I circled this, but this is a downtrend, right? Very aggressive downtrend, like almost straight down, right? But this is a very aggressive downtrend. This is shorts coming out of Dogecoin, right? So if you are saying that the asset is about to go down, threaten down, why aren't the people who are betting, who make their money from the asset decreasing, why aren't they confident, right? So when you see stuff like this means that to them, it's a higher risk to come in and short the coin now versus the actual probability of it going down and them making money, right? It's not worth the risk. So they would rather keep the money that they already have than to jump in front of a train and get wrecked, right? We've seen this several times in the history, recent history here, where they've gotten wrecked and had to come out almost immediately because price action was just simply too strong. And then you can layer this with the indicators. What are you saying here? 200-day falling. The 72-day has certainly peaked in its flatlining here, and the 14-day, which is the most relevant recent activity, same thing, going through the absolute floor, right? So you have here, and same thing with Bitcoin. I didn't point that out, but you have, if you're looking at averages, you're looking at death crosses are coming up here. 14 crossing the 72, death cross, right? Right after that, 200, death cross, right? So the pattern for these shorts are not giving confidence that they believe that they're in a position to make money on these assets coming down. So you have to kind of look at all these things and say, okay, well, why are the shorts running out, right? And let's take a look here at short liquidations, right? Let's really break this down and get a feel for the market. We're going to take a look here at short liquidations. Short liquidations over the last 24 hours. Remember, this is not all of the exchanges, but just some of them, so you can get a feel for the market. Short liquidations compared to long. Longs 2.1, short 7.7, right? So now we got liquidation shorts as far as for people actually coming out of those short positions are now 3-1, right? So now we have a reversal here and we're not seeing swapping. This is what I meant when people say, oh, well, the swapping doesn't mean anything. You have to know how to you have to understand what the charts are telling you. So swapping is typically people that are long in the asset and they are not sure when it's going to take off, but they want to have the best price for when it does. So even though I'm long, I could still swap my position out and just renew my my option contract, my long contract, get a longer date, all that kind of stuff. Even though I'm still long, so it'll come up as a liquidation, even though I'm still buying. I'm coming out and I'm coming right back in. Right, that's telling a different story versus longs coming in and then they're holding. When you see that information switch. And now you have shorts that are simply coming out and they're not re-entering. So they're not swapping, they're coming out. And you see longs being steady or increasing. Now you have a change of tides in the market. So when you see these things, hold on, I don't want the chart. Let's go ratio. When you see these things, it's going to give you a better idea, right? So now you have like 70-30 splits here. And the 5-minute, the 30-minute, we're for like 69.53. The 1 hour, 69.86. 4 hours, 69.78. And the 1 day, 70.29. So now you're seeing the fulfillment here of these swaps here, because now the longs aren't swapping, they're holding steady, and the shorts are leaving. Open interest in the last 24 hours has increased almost 25%, 24.05% on the books, approaching $1 billion. Look at the open interest here, right? So this is the people that are taking, I forgot, I don't have my graph on here, but you can see here, what is this from the last couple of days here. So from the 19th to the 20th, right? This is literally just in the last day. And then you have a continuation of the day here of around 844 million. What does this mean? This is the capital that has flown into Dogecoin in the last day. So we're talking about almost $300 million in open interest in the last day. That's a big deal as far as for the aggression coming in here. And we probably, at this rate, we'll probably hit $1 billion within the next day or so. So even if we see some red, it's not that big of a deal. What's important is maintaining some of these numbers here. So we can have some back and forth. It's not going to be, I know some of you are newer investors. It's not going to be a straight green candle. It's not going to be one God candle that gets us there. There's going to be some red days in there. When we went for, I think, 9 days on Dogecoin to get that, when we wanted that initial run at that golden cross, that 9 green days, that was a historic run. Will we see something like that again? I don't know, but it hadn't happened before. So unlikely we'll get 9 straight green days again, like when I'm referring to this time frame here. but it's important to know where we are in the cycle and make sure that we are not overlooking any of the important data here and replacing that with emotions. And so this is, as long as we're here, even if I know right now we're green, but I'm just speaking, hypothetically, again, this is an open candle, so it can certainly change. As long as we are, especially as long as we're above the 72-day, 1630 is really good, but we're going to have pretty much at this price action, we're going to force this intersection here. And that's going to align us and keep us aligned with what's happening with Bitcoin, what's happening with total market cap, and we're going to be right in that pathway here for the upward trajectory. So that's propelling Bitcoin to 100,000, and that's going to propel us to some of those higher numbers. I have it somewhere between like 39 and 45 cent. If we get some FOMO, obviously it can go higher. I can't chart that, unfortunately, but I'm just taking some of the averages that we've seen in the past and comparing it to what I'm seeing now and compiling all the data like we just went through in this video. So I hope you guys found some value. If you can, we are still on a mission here to beat Bitcoin to 100,000 by getting 100,000 subscribers first. So if you found value in this video, if you found any of the things that I said useful, please consider subscribing and giving us a +1 toward the 100K before Bitcoin has this big explosion and beats us to 100,000. So leave me a comment in the comment section. I appreciate all of you, and I will see you guys in the next video.